Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of how money makes the world go round. And today we are diving deep into the financial world of Equus Total Return Incorporated. Looks like they've got an amendment to their annual report, and let's just say there are some interesting numbers and, well, let's just call them necessary adjustments. Before we dig in, if you enjoy deciphering these financial mysteries, please hit that subscribe button and the notification bell. And hey, we've got a fantastic community discussing these filings over on our Discord. Link in the description below. So, Equus Total Return Incorporated is filing an amended annual report. Usually this means something was missed or needs clarification. In this case, it's all about adding the proper XBRL tags, which is super important for making Financial Data Machine readable. They've already filed the main report, and this is just a technical update. Now, let's look at what's actually inside this report. First off, let's talk stock prices and value. As of the 30th of June 2024, the market value of their common stock held by people who aren't insiders was around $8.4 million. This is based on a stock price of $1.32, pretty low for a company, and it tells us something about how the market values them right now. What's even more interesting is the net asset value, per S-Hare, or NAV. On the 31st of December 2024, it was $2.17. That means the stock was trading at a huge discount to what the company's assets are actually worth. In fact, on the 31st of December 2024, their stock was trading at a 62.9% discount to its net asset value. That is a massive gap. Often, this signals that investors are unsure about the company's future prospects or its ability to realize the value of its assets. Now, let's talk about how the company is doing. Equus is a business development company, or BDC, which essentially means they invest in small and medium-sized companies. They've also historically operated as a regulated investment company, or RIC, which is a tax advantage. But here is a big change. In the fourth quarter of 2024, they decided to not qualify as an RIC anymore. This means if they earn money, they will now pay corporate taxes on it, which is a direct hit to their profits. A huge part of Equus's business is valuing their investments, especially because most of them are private companies and don't have easy to find market prices. This process is complex and involves a lot of judgment. They use independent valuation firms and look at various financial models to estimate what their investments are worth. However, they acknowledge that these fair value estimates might be very different from what they actually receive when they sell these investments. This uncertainty is a key risk factor. Let's look at the hard numbers. As of the 31st of December 2024, total assets were about $29.9 million. Now compare that to the 31st of December 2023, when their total assets were $93.5 million. That is a massive drop. Nearly 2/3 of their assets have vanished or been sold off. Where did most of those assets go? Well, on the 31st of December 2023, they had $44.9 million in US Treasury bills. A year later, that number is zero. This suggests they've likely sold off these holdings to raise cash. Now, for the income statement for the year ended the 31st of December 2024, Equus reported a net investment loss of $3.3 million. This is common for BDCs that are focused on growth. However, what really stands out is the change in unrealized appreciation. They went from an unrealized appreciation of $24.5 million at the end of 2023 to just $8.9 million at the end of 2024. That is a decrease of $15.6 million in the estimated value of their investments. Much of this decrease is tied to their holdings in Morgan E&P LLC and Equus Energy LLC, primarily due to lower oil and gas prices. Let's zoom in on Equus Energy. For the year ended the 31st of December 2024, they had a net operating loss of $79,000. This subsidiary, which deals with oil and gas properties, isn't performing strongly. This directly impacts the parent company's bottom line. And then there is Morgan E&P LLC. This subsidiary also had a rough 2024, reporting a net loss of $11.7 million. They also took a big hit with an impairment of oil and gas properties valued at $6.7 million. This is a significant write-down, meaning they believe those assets are worth much less than previously thought. This section is critical because it highlights where the most guesswork is involved. The company classifies many of its investments as level 3 in the fair value hierarchy. This means their value is based on unobservable inputs, essentially educated guesses. For their control investments, which are the bulk of their holdings at $27.5 million, all of that value is classified as level 3. This high percentage of level 3 assets means a significant portion of their reported value is based on internal estimates rather than market prices. The significant unobservable inputs for these investments include things like acreage value multiples, estimated future production, and discount rates. Small changes in these assumptions can lead to big swings in the reported value of their holdings. Looking at the schedule of investments as of the 31st of December 2024, you can see a big shift. Their control investments are valued at $27.5 million, which is much lower than the $40.8 million they were worth. At the end of 2023, the energy sector dominates their portfolio, accounting for 93.2% of their net assets. This concentration means that any major shifts in the energy market will have a huge impact on Equus's overall financial health. Here is a crucial piece of information. Management acknowledges that they did not maintain effective internal control over financial reporting as of the 31st of December 2024. They identified a material weakness specifically related to the valuation of their portfolio investments. This means there is a genuine possibility that financial statements could contain errors that might not be caught in time. They're working on fixing this, but it's a serious red flag for investors. They explicitly state that the value of their energy segment was 93.2% of their net asset value on the 31st of December 2024. This extreme concentration in one industry, especially a volatile one like energy, is a significant risk. If the energy market takes a downturn, Equus will be hit hard. Now, let's look at what happened after the year ended. On the 10th of February 2025, Equus issued a convertible note and warrants, raising $2 million. Then, on the same day, they made a new investment, buying a convertible note for $1.5 million. This shows they are still actively making deals. And here is a major event. On the 3rd of March 2025, they sold Equus Energy. The subsidiary had been struggling, so getting rid of it makes strategic sense. They received $1.25 million in cash and some preferred stock for it. This sale also happened after the reporting period, so it is a significant subsequent event that will impact future results. So, what is my take on Equus Total Return Inc.? After reviewing this filing, it is a company in transition, and frankly, it is a risky one. The massive drop in asset value, the decision to stop being a tax-efficient RIC and start paying corporate taxes, and the admission of a material weakness in internal controls over financial reporting are all significant concerns. Their heavy concentration in the energy sector, which is notoriously volatile, adds another layer of risk, while they are actively making new investments and have sold off a struggling subsidiary. The overall picture suggests they are navigating a challenging period. The huge discount to their net asset value might seem like a bargain, but it reflects the market's uncertainty about their ability to turn things around and realize the value of those level 3 investments. This is not for the faint of heart. What is your opinion on Equus Total Return's financial health and future prospects? Let me know in the comments below. If you found this deep dive helpful, please give it a thumbs up and subscribe for more corporate financial analysis. And don't forget to join the conversation on our Discord community. The link is in the description. Thanks for watching, and I'll see you in the next video.